Hello, my name is Chad Hart. I'm an extension economist with Iowa State University Extension and Outreach. And today we'll be talking about technical chart signals. And when you're looking at technical signals, it's a combination of factors here. What you're doing is we're basically looking at past and current price movements in the situation in the marketplace and trying to infer or forecast what future price movements will be. And it's more of an art than a science when we're looking at the technicals. Every technical trader has a little bit different rule, if you will, in what they're looking for in the marketplace to determine that technical signal. But we'll give you a general feel for it as we go through this series of slides. When you look at some technical patterns, it relies upon the user recognizing a pattern within the marketplace. And so it's a matter of, if you will, graphing the price data, looking at the pattern that we see there and then saying, you know what, I think I see this signal here. In other cases, the signal is really derived from a formula, looking at those price movements, plugging them into a formula and saying, okay, there's a place where we need the market, is moving, and I want to make an action based upon that. At its basis, what technical trading does is it looks at a pattern of prices like we're seeing behind us here and says, do we see a trend? And this is a trend that I can utilize to make a move in the marketplace. And the way we do that is we look for, like I say, establishing a trend. And what's called a trend, we look for channel lines. And so what a channel line is, as you can see here on the graph, is it's basically a line that says, I think I see a trend moving up here. I want to examine that trend and then see when we break out of that trend. Now, the way I build this channel line, if I'm looking at an uptrend here, is I connect the two lowest points as I see here in the history here, draw a line connecting those two. Then I take that channel line and then I take a parallel line to that and raise it up to the top part, or the top price that I've seen over that same period of time. And that creates a channel. And so when you look at this channel, I've got my channel lines in there, I've got a channel drawn. And then as prices, if they stay within that channel, I assume that they're staying within the trend that I'm seeing there. But it's when I see prices move outside, or I start to break those channel lines, that's when I see a change in trend that's indicating I need to make a move in the marketplace. Now, what I've shown you here is an uptrend or an up channel, but you can also do the same thing on the downward side. When you're looking at a downtrend, here you start at the top instead of the bottom. Again, connecting the top 2 points here and then drawing a parallel line that matches down with the bottom part. And again, I'm looking for that same idea. As long as prices stay within the channel, then I'm assuming we're in a downward trend. But as soon as I see that price deviate up, well, then that's indicating I need to make a move in the marketplace. Now, what sort of moves do I make? Well, in this case, if I'm looking at an uptrend and I see it break on the downward side of that channel line, that's indicating a sell signal. That's saying that I'm looking at prices going down, and you know the rule of I want to buy low and sell high. Well, in this case, by breaking on the downward side, that's indicating prices are going to move down. So I'm looking to sell at a high point here. That's considered a sell signal. And in the case of most technical traders, they see that any 1 day close below my channel line there indicates that I want to make a sale. In this case, usually in the futures market. Now, I was looking at a buy signal. There we'd be looking at a downward trend, and when we pop on the upside, when we break the channel on the upside, that's indicating a time to buy the product. Because again, I'm looking to buy low, sell high. By busting here on the high end, what that's indicating is prices have hit a low point and now are starting to work their way up. And so again, going back to buy low, sell high, this is a buy signal. Some chartists would tell you that they only need 1 close above the channel line to indicate a buy signal. Others say, no, I want to see at least 2 days there. And so they, if you will, they're a little more cautious with a buy signal than they are with a sell signal. Now, there are other types of signals that the marketplace can provide as well. Some of the biggest ones are known as resistance and support levels. What these are levels where the marketplace tends to, if you will, bounce off of and then come back to over and over again. When we talk about a resistance price or a resistance point, that's a market price that, like you're seeing here, where the market seems to go up, hit that price, and then bounce back down again. It tends to do that repeatedly, and that's known as a resistance point. And so you'll see a lot of traders talking about how we'll develop a resistance at a certain price. And these prices tend to be at round numbers. For example, if we're talking about $3.50 corn or $4 corn, any price, if you will, that tends to end in a zero, tends to be possibility of a resistance point there. A support price sort of works the same way, but it's on the downward side, a price that we tend to go down, hit, and then bounce back off of. And so these are price levels that, again, technical traders look at to see, are there a resistance point building in the marketplace or a support point that's building in the marketplace, which indicates maybe a price floor or a price ceiling that the market is playing within. But again, not all technical aspects here, technical signals, have to be something that you see from the graph. Others are derived from the mathematics, if you will, behind the graph. A lot of traders like to use moving averages of the prices to determine buy and sell signals. And what they tend to do is they tend to track the market over time, not only on a daily basis, but looking at a 9-day, an 18-day, a 40-day, a 100-day average price as well, and they graph that as well. And what you look for here are when these moving average lines cross. And when you see, in this case, when you see the, if I'll call it the lighter day averages, in this case I've got a 9, an 18, and a 40-day average moving price in this graph. When you see the 9 and 18 days dive below the 40-day average, so the short-term average dives below the long-term average, that's typically known as a sell signal, because that's saying that the short-term movement in the market is down while the long-term has been higher. And so that's typically indicating that the market's at a relatively high price compared to history. Therefore, I want to sell the product again. I want to buy low, sell high. On the flip side of that, when you see the opposite pattern occur, when the long run average is moving below the short run average, this is indicating a buy signal. Because again, the short term movement is up where the long term average has been down. And so these moving averages provide a technical signal to how you want to play within the marketplace. Now, does every technical signal work every time? No. In this case, technical signals do indicate general trends which tend to work in the marketplace, but none is guaranteed to exactly work every time. And that's one of the keys with technical trading. It's a rule that helps you in the marketplace, but it doesn't guarantee you a profit by following a technical strategy each and every time. That's why you tend to see market traders talking about not only the fundamentals, the supply and demand factors within a market, but also the technical aspects that they see, and they look for the combination of the two to really give them a full indication of what's going on with prices in the crop markets. With that, I want to thank you for your time again. My name is Chad Hart, an extension economist with Iowa State University Extension and Outreach. Good luck and happy marketing.